The recent tumble in the U.S. stock market may have scared some investors away from equities, but it isn't keeping them away from ETFs, with total gold ETF holdings now reaching their highest level since May 2013. Joining me today is a 16-year veteran of the ETF world, Will Rhind, CEO of his latest venture, GraniteShares. Welcome back to the show, Will.
Thank you. Good to be here.
So what's amazing is we're seeing all this interest flowing into gold ETFs, yet spot gold is not moving the way people want here, Will. Why not?
Well, gold ETFs obviously don't drive the price of gold. They're one element in terms of price formation or price discovery in the gold market, but they're not the thing that drives the gold market. The gold market is driven by supply and demand, as you know. But this is a trend that started a couple of years ago. So commodities and gold more broadly, started to pick up a couple of years ago, and we've seen a sort of gradual build of interest and demand for the sector. And that's really built around kind of two things in my mind: weaker US dollar and more volatility and increasing fears of inflation in the market.
But with the volatility that we've seen in equities, especially this past week, that's why I was going to the gold price here. People were really expecting it to move much higher. Were you surprised it didn't?
I wasn't surprised, because I think it's a little bit like what happened in 2008, where the market, when you have a big volatility shock or a big shock to the market, what actually happens initially is that gold prices don't respond in a very positive way people might think. And the reason for that is because the immediate risk-off trade is normally into the US dollar and into US treasuries. And that's exactly what happened in 2008. That gold actually fell first when the market crashed, but then only then really started to pick up.
What about the other aspect, though, the Federal Reserve? We know there are rate hikes coming, so is that weighing on gold?
I don't think so, because I think the rate hikes are obviously very well telegraphed to the market. And so I think that the rate hikes are priced into the gold market. And indeed, if you look at what happened to the dollar, really when the tightening cycle started, the dollar started to fall and gold prices and commodities started to move up. So I think that the rate hikes are less of an issue for gold right now. It's more about the dollar and more about the equity market and volatility more broadly.
You're not just eyeing gold. You recently launched an ETF backed by platinum.
Yeah,
Why
that's
platinum?
Right. So platinum, first of all, is just an extension of our philosophy to provide the lowest cost and simple access to commodities for investors. So a new platinum ETF, ticker code PLTM. What that does is very similar structure to our gold ETF, BAR, just provides simple exposure to the spot price of platinum for the lowest cost here in the US market. We think platinum's an interesting story, because if you look at the market share of gold ETFs in the US, you've got about 60 billion in gold ETFs. If you look at platinum, that share of wallet is around 500 million. It seems very disproportionate when platinum is 30 times rarer than gold. Right now, as of this year to date, it's outperforming all other precious metals, has really good fundamentals in terms of the actual supply is expected to be in deficit again this year, and then demand is growing because it has a lot of exciting applications, both in industry and for jewelry demand as well.
I've come back from many conferences where people feel extremely bullish on palladium. So would that be a metal you'd eye next?
I think palladium is certainly something that we would consider, but at the moment, what we're focused on is providing access to the core commodity groups, broad commodities through our two broad commodity funds, gold obviously through BAR, and then platinum through PLTM. I think platinum is something that people will look at for this year. Palladium was very much a trade of last year, of 2017, did very, very well. Looks like the price has peaked a little bit for now, maybe kind of overshot a little bit last year. But platinum's starting to pick up, and I think that it's something that has been overlooked by investors, and frankly, given the disproportionate market share between gold and platinum, I think it's a story that people don't really know.
We've already seen a big rally in platinum this year, so how much higher do you think it can go here?
Well, remember that the all-time high for platinum is over $2,000 an ounce, about $2,200 an ounce.
Right.
So right now, even though we've seen a rally in platinum, at prices around 1,000, it's still less than half of all-time high.
But once upon a time, rhodium was also at 10,000, lest we forget, right?
Yeah, but still, in real asset terms, there aren't that many markets that are trading that far below their all-time high. If you look at real estate, if you look at the equity market.
So amongst all the precious metals, would you say you're most bullish platinum right now?
I think platinum has the better fundamentals for sure, in terms of a market that is in deficit, and demand is growing. I wouldn't say that we favor one metal over the other, but I think from a pure fundamental perspective, platinum is looking good for 2018.
Not playing favorites. Will Rhind, thank you so much for joining us today.
Thank you so much.
And thank you for watching. We'll be back tomorrow.